Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for guys.
So, it looks like we have a busy week ahead of us in the financial world. The main focus will be on the recent stock market rally and whether it can hold up in February. And, of course, we have a ton of earnings reports coming in from big names like Disney, Robinhood, Uber, and Pinterest, to name a few. As for economic events, we have a light calendar, but a big highlight will be Federal Reserve Chair Jerome Powell's appearance at the Economic Club of Washington, D.C. on Tuesday. He'll be interviewed by David Rubenstein, and investors will be closely watching for any hints on the direction of the Fed's monetary policy. Now, you may have noticed that the stock market took a dip last Friday after the January jobs report showed a higher-than-expected increase in payrolls, which dampened the prospects for an imminent pause by the Fed in its rate-hiking campaign. Despite that, the S&P 500 and Nasdaq still closed the week higher, up 1.6% and 3.3% respectively. Despite some doubts from strategists, the equity markets have been on a winning streak to start 2023, with optimism fueled by a recent slowdown in the Fed's rate hiking pace and the possibility of rate cuts this year. For the year, the S&P 500 is up 7.7%, the Nasdaq 14.7%, and the Dow 2.4%. As for earnings, it looks like we're still seeing subpar profits this season. The share of S&P 500 companies reporting positive earnings surprises remained flat, but the magnitude of these surprises has decreased, largely due to disappointing results from tech giants. This could lead to a year-over-year decline in earnings for the S&P 500 for the first time since Q3 2020. One earnings report to keep an eye on this week is Disney. It's the first time they'll be reporting since Bob Iger returned as CEO, and there's a lot of pressure on him to prove he has the right ideas to stimulate growth, especially in the streaming business. In the theme parks, we're hoping to hear some positive momentum as travel continues to normalize and China reopens. Disney, DIS, is set to report its earnings after the close on Wednesday, February 8th. Analysts expect Disney to earn 79 cents per share on revenue of $23.36 billion, compared to last year's earnings of $1.06 per share on revenue of $21.82 billion. Disney stock has seen a recent surge of 30% year-to-date, driven by optimism around its streaming platform Disney+. The company has set a target of gaining between 230 million and 260 million Disney+ subscribers by the end of 2024. However, the market is curious about the company's long-term growth strategy, especially as it may require significant investments that may impact profits. Investors are also looking for details on the company's advertising-supported tier on Disney+. Now let's talk about Uber. They are at a crucial price point sitting at $33 at the time of this video. Investors are eagerly anticipating the release of Uber Technologies, Uber, Q4 2022 earnings report, which is expected to be released on February 8, 2023. Wall Street analysts expect the company to report a year-over-year decline in earnings, but with higher revenues. The consensus estimate is a loss of 20 cents per share, which represents a year-over-year change of minus 145.5%. Revenues are expected to be $8.5 billion, which would be a 47.1% increase from the previous year. It is important to note that the consensus earnings estimate for the quarter has been revised 19.07% lower over the last 30 days. This means that the covering analysts have collectively reassessed their initial estimates, which could impact the stock's performance after the earnings release. Investors may also find value in considering the Earnings ESP, expected surprise prediction, for Uber. The most accurate estimate is resulting in an Earnings ESP of plus 4.60%. Additionally, the stock currently has a rank of number 3, indicating that it is likely to beat the consensus EPS estimate. It is also worth looking at the company's earnings surprise history. In the last reported quarter, Uber's actual loss was 61 cents, which was much higher than the expected loss of 17 cents per share. This resulted in a surprise of minus 258.82%. Over the last 4 quarters, the company has beaten consensus EPS estimates just once. This history may provide some insight into the likelihood of the company beating or missing the consensus estimate in its upcoming earnings release. In conclusion, while the consensus outlook for Uber Technologies' Q4 2022 earnings is important in gauging the company's earnings picture, there are other factors that could impact the stock's performance after the earnings release. Analysts' estimate revisions, the Earnings ESP, and the company's earnings surprise history may provide valuable insight for investors to consider. That's all for now, folks. Stay tuned for more financial news and updates, and let's see what this week has in store for us. As always, subscribe, like the video, and comment your watch list and thoughts.